The world will mark an important milestone as the global population surpasses 8 billion people.
2022 was a crazy year, not just for stocks and shares, but for world economics as a whole.
After weeks of flirtation and fighting, the new couple has officially done the deed.
This episode was recorded right at the end of last year with fellow YouTuber Buy, Hold, Sell with Damian.
Crypto crash.
$32 billion just vanished.
My money don't jiggle jiggle.
In this episode, we talk about the biggest economic events that happened this year, some of which you may not be aware even happened.
I mean, there was a scary moment when the interest rates, well, Liz Truss did whatever she did. Oh, the mini budget.
I am resigning as leader of the Conservative Party.
And then the pensions pretty much got margin calls. Like the pensions were this close. Like
Wow.
UK society was about this close from just company collapse. And it just sort of was pushed under the radar. But like they were so close to just saying there's no pensions anymore.
We also talk about our investment strategy going into 2023, what we plan to do with our money, how we plan to deal with things like Feds raising interest rates. If you find this video helpful, please leave a like and subscribe.
Yeah, you said I can curse.
Yeah, you
Oh.
can. Yeah. I don't think I have any
not
children
curse
watching.
too much, but that's part of my issue when I edit things.
Should we get it out of the way? Should we get just some fucks and some
Well, fucking bits, yeah.
shit? Bollocks.
Is that better as well? Turn more nights off.
Oh, it's freaks your camera out for a second, but I think it'll calm down. Have you found doing YouTube lately?
Yeah, I do live like one-on-one calls with people. I wouldn't want to be on YouTube and have the issues. Where if I have issues with someone like one-on-one, the way we're having now, you can just go bear with me. That's fine, you know. But I wouldn't want the pressure of everyone talking. If no internet, it just wouldn't look good to be like, can you invest into the internet? Never mind anything else. I can't invest. There's no choice. I've got the best that I can get. Apart from Starlink, which I'm very much considering getting.
Are you thinking
There's
about
no
getting
other
it?
option. Yeah, but it's like £90 a month, and it's like £600 for the kit.
Whoa.
So £600 one-off payment, and then £90 a month, and you're only guaranteed 50 meg or up to whatever crazy speeds. But no, my luck, it'll be 50 meg, and I'm getting on average about 25 now. So I'm going, is it worth £500, £600 down payment plus what, an extra £70 a month?
Oh, God, that's a hell of a lot a month. You sort of forget that Elon Musk has all these other revenue streams.
I know.
I'd love to just delve into his personal finances because that's the news today, isn't it? That Tesla shares are tanking. Where are they now?
Don't talk to me about Tesla shares. Me and the
You have
Discord
Tesla shares?
had a nightmare a couple of days on Tesla. Thanks to Elon Musk and his Twitter antics, trying to play 4D chess with one of the smartest men in the world. You're never going to win that battle. Like,
No, I can't believe how lucky I've gotten by staying out of Tesla this entire time.
I mean, this last year, probably a good move. Prior to that, you probably were foolish not to be able to go that way.
There's an element of like, I look at Tesla's financials and they're terrific. Probably the best financials of a car company. It's just unprecedented how devoid the share, in my opinion. Other people have ways of sort of justifying their market cap. It's weird how easy it is to talk about Elon Musk, and he's quite divisive. I don't quite understand the level to which he's disliked by some people. I don't particularly love him, but I don't quite understand how he became the enemy of, I don't want to say that the left sounds cartoonish. I don't really subscribe to that. But
Well, if you think about it, he's changing how the big players make their money. The oil. He's telling people to stay away from oil, go electric, big car manufacturers, and these guys pretty much rule. You know, they have done. They've ruled the sort of American stock market since its inception, really. So he's coming along with all his innovation, changing everything, and streamlining everything, changing the way business is work, and he's doing all these things, and it's just stepping on so many toes. And I see a brilliant quote. I'm going to butcher the quote, but there was a brilliant thing that I read that if you're not making enemies, you're not being successful, because you should be making people jealous. You should be making people, well, two things. People should strive to be with you, and, you know, the eagles fly together and all that, but most people will get jealous or, you know, oh, I don't like that person because they're probably doing better than you. That, you know, that's just the way I think we're kind of built.
Do you think that's one of the reasons Joe Biden doesn't like him? Do you think Joe Biden doesn't like him because of sort of moral reasons, or do you think it's an association with oil?
I think Joe Biden, well, he's just a puppet really at the top. You know, the guy's, he's not up to the job. You've probably seen all the stupid memes about him and all him falling asleep and tripping up his words and having to read off bits of paper. I mean, getting into politics is a whole different story for me, but I mean, these guys are just people at the top. It's the people in the background that pull the strings, and
it's like more people sort of see Elon Musk. Oh, this is a massive assumption, but in my circle of friends, more of my friends would probably be angry at Elon Musk than the CEO of BP. They wouldn't even know who the CEO of BP is. And like once an electric car company, you may not like the emails he sent to his employees or something like that, but ultimately his employees aren't going on strike or going to the press saying that he's terrible. They say that he overworked people, but they generally want to do the work because he's making them work on such exciting things. They generally want to.
And I think he works. It's not like he's cracking the whip and sitting back. I mean, in Tesla's early conception days, he was very much on the ground floor with these guys, working as much as possible, meeting the deadlines, leading from the store. He wasn't living the big glamorous lifestyle. He was on the floor with these guys every single day, and all he asked was, you meet my work ethic, and if you can, we'll go places. He is selling a bit of, you want to call it cult culture, maybe potentially, of saying we're going to change the world. You're coming to work for more than a company. It's a project and life changing and all of this. And I do agree with it. I mean, he's literally moved electric vehicles to the here and now. I mean, if it wasn't for Tesla over the last 10 years, we'd probably still be talking about, CO2 emissions changing in 2080 or something. It's
mad to think how slowly we were moving towards electric cars, and everyone talking about how, we're not ready for it, we're not ready for it, we're not ready for it. I watched a radio show with the CEO of the National Grid in the UK, and what he sort of said was, we're not ready for electric cars yet, but if we don't do it now, we never will be. And there's sort of like all in the media, they focus on the stats about how we're not ready for it. It's like, but if we'd built that infrastructure yesterday, you would have said, but there's no electric cars on the road. And it's like, we were doing it all. Some bits are going to be done before other bits. And they're constantly going to be pushing, the electric cars are constantly going to be pushing the infrastructure, and the infrastructure is going to be pushing what the electric cars can do. A bit like, the best comparison I can think of is there's always either a faster GPU in a PC or insufficient hard drive space. And they always sort of follow one another. It's now we've got this really incredible GPU, but the hard drive space is enough. Suddenly the hard drive space becomes way too powerful for the capable for the GPU, and then suddenly that gets ramped up again. It's like there's no point ramping that thing up beyond the infrastructure that exists. And so that's just how I see it with electric cars. It's like
just nonsense. These politicians all have their money in stocks. I mean, I see another great thing. A sports person is not allowed to bet on a football match. Footballers are allowed to bet on a football match, but politicians can invest in any stocks they want, and they have the control to manipulate those stocks. It is ridiculous. It's shameful, and that is all. It's just lying in their pockets. Elon Musk comes along, and it's just not fitting into where their money is sitting on the agenda.
That's one of the hardest things has been for me after getting into investing, realizing that the moral standards that exist within economics, within capitalism, are actually higher than the ones that exist in government. The laws in government are actually far below the rules that are in place at most companies that are put in there by free will. And I find it's oftentimes where corruption occurs, it's where the government, where they created a need for that corruption to exist and then profited off it. And then they go, oh God, look how bad BP are. They've been giving us bribes. So you just created those rules and profited off them. I expected BP to try and bribe you. I didn't expect you to take it.
Sure. The big tip off that I'm reading into a lot now is, although I'm morally against uranium, there's a stock called UROI, which is uranium company in America, and uranium sort of exporting in America is something 20%. They rely heavily on that or something static. Again, I'm none of this in front of me.
Just run nuclear power.
Is a high level. But
tomorrow,
what I'm trying
to Damian
20%. This is what's
uranium.
Do your own due diligence. Not a financial advisor, but
I'll go on Wall Street bets straight after this.
But if you look at the charts on that, I mean, that you're buying at a low price right now, and to me, I haven't covered this on my channel or anything. This is new, but I'm doing a lot of due diligence into that because I think that's just going to explode. I think with all this energy crisis, you're talking about the UK. Talking about upping their nuclear power plants. It's just, we could go to offshore wind, but no, that apparently is aesthetically oh, that doesn't look pretty. I wouldn't want wind farms over our green countryside, but crack on with the nuclear power plant, no problem with that. Like, will we not see what happens in Chernobyl? Like, let's risk all of this, but we don't want those eyesores that are wind farms. Don't get me wrong, there's a lot of wind farms that you need to be able to power. I know it's not just as easy as that, but some of the stuff it's ridiculous.
Well, I live in Brighton, and so it's really, I mean, it's shocking to believe when you hear about how many people were against the wind turbines being built here.
There's always somebody that has something to say about whatever it is. There's always on two sides an objection. That's just life, isn't it?
Yeah.
Greater good should come out here, but again, it doesn't fit the narrative. It doesn't suit them. So we'll keep polluting our waters, keep polluting our airs.
How has your trading been in 2020? Probably been one of the. It's quite nice chatting to like at the end of the year. How has it been?
Well, I predominantly swing trade, so
right.
it's been a swing trader's dream, really, this market. It's been so volatile up and down. So we've done well. I mean, it was about this time last year I put on the channel, look, we're going to go into a bear market. Everyone was like, oh, what are you talking about, going to the moon and all this shit? And and I got a lot of stick for it. And my channel growth is sucked. It's went stale. I mean, my channel got up to 3,000 so quick in the first year. I was like, that's brilliant. The money was going great, the ad revenue, and not great, but you're getting £30-40 a video. You're going, freaking hell, this is
nice.
I'm going to be retired, and my dreams are coming true, kind of thing. And then you start talking about a bear market, and you start saying you're going to lose all your money if you don't do this, and be careful. And I wouldn't be buying these pump and dumps, and then it becomes, okay, we're not going to watch your videos no more. And then I've got my loyal Discord, which shout out to the family. We're just be short in the market, riding trends, buying bonds, buying gold, buying oil, buying just on reversals and trying to make money where we can. Have we won every trade? No, but there's no trader that does. Is it being tough? Yeah, I mean, I feel that any fundamental trades that have been made, and I've made some terrible ones the last couple of days on Tesla. Any fundamental trades, I think all but a few have went south, have not went the right way. I think very much it's looking at the charts and understanding trends, understanding support levels, resistance zones, and being able to sort of ride within that. Just even using basic things like the RSI and just applying a bit of common sense is really, really massively helped me. And I'm really looking forward to the next maybe 2-3 years, because I think we're going to probably enter quite a long sideways market. I don't see a V-shaped recovery. I would hope, well, Powell's recent conversations there spooked us a wee bit. I thought maybe by Q2 we would have a change and they would pivot. And we would maybe rally to sort of the pivot. We're starting to see it easing, but then I don't know if you watched his interview, but we watched it through, and he said in 2023 we will not be pivoting. And then I think that's what's led to the last 2 weeks of real pain, because I think the market was baking in that we were going to pivot in 2023. But he did have a small little caveat at the bottom saying, unless the data says different. So I'm still hopeful that that's going to happen, but maybe in the next 6 months is a bit hopeful. It's maybe going to be a bit longer, but We'll let the charts guide us. Because
I've been trying to set up a more the sort of more stupid is the best way I can describe it. That's how I'm describing it in my video. Dumb investing style, which is obviously just purchasing. It's a very passive style, which is £200 a month into the S&P 500, the US one, and not just that. Just like as basic as possible. It's using Vanguard and Hargreaves Lansdown, and doing it on Hargreaves Lansdown. And because I'm 27 to 35, I can take advantage of the government's 25% bonus. They give me 25% on top of every £4,000 I put in per year. So it's like, okay, got to use that. But interestingly, like I did in my video today, I was like, I know the Shell PE ratio is 27, which is still quite high. But what is technically the PE ratio that I'm getting it for? So after I deduct I'm technically buying $5,000 worth of the US 500 for $4,000. Remarkably, the PE ratio is still 22 after I factor that in. I really logic is telling me I'm not getting good value. And so I am going to leave that running passively in the background, but I'm certain, I know two things are statistically likely to happen, and it's not cause and effect. Having a high PE ratio does not indicate there will be cause of one of these two things, but either the price is going to come down or the earnings are going to come up. That's just historically very likely. And so as much as I'd like to believe that inflation is going to cause the earnings of these companies to go up, now that we're hearing about savings accounts being reduced and stuff like that, seems incredibly likely that, yeah, as you said, we're just going to have that sideways market till the earnings steadily catch up. But there's nowhere else to put your money. That's the tricky thing. Everything has a high price to earnings. So looking at property and stuff like that, I mean, property's crazy. It is always high.
Wouldn't go near property yet. I used to be an estate agent. I'd be leaving the property. But, property lags. It's going to be the last one nearly to fall off because you need valuations to come down. It's just a longer process. And yes, we've seen a bit of a pullback in the housing market, but it's nowhere near.
But also, property is one of the only markets that actually kind of works. So, like, there's that joking meme that stock market is the only market where the price goes down and people want to sell whole.
Yeah.
And in property, if someone comes up, and that's it. If someone comes up to your property and says, "I'll give you 20 quid for it," you go, "No fucking way, I'm not doing that."
Yeah.
And yet, stock market, for better or for worse, that is what happens.
I know. Yeah. It's a weird thing because if you went in any discount store or any superstore and you went in and your jacket was £100, you went in the next day it's £50, you'd buy it. Well, the stock's at discount that you've done your due diligence, you love that stock, you friggin' want to be everything about that stock. Instead of buying more, you sell it at a loss. I don't get that. I don't. I never do. I mean, as a trader, again, I can't say that I don't sell losses because I do sell losses. I have a sort of a rule that I try to stick to, but it all depends on support levels and where you're at. If you fall below, I can see is right, we're going to fall over 20%. To me, it'd be foolish to keep my money in. But in my long holds, what I tend to do, the long holds we cover the channel, I try to buy low and try to trim high. Depending on where we're at, sometimes I just hold. But if we were to fall below a support level, I would sell then with the aim. And we did a trade the other day on Premier African Minerals where it was key, fell below, we sold, it fell like another 15%, we rebought the same position back in, which is good. Like, that was a great trade. However, you can have the problem where obviously you don't get bought in, a fundamental news comes out, which can happen on any given day, and you can miss that opportunity, which can happen. You have to take the good with the bad. But you know what I'm saying there. It's just one of those things with when you're swing trading. That's why sometimes nearly dollar cost averaging is the best way to do things. Like you're saying about the S&P. I mean, if you wanted to be a millionaire, just dollar cost average into the S&P mostly for like 15 years and you'll be there. Unless somebody...
So funny you said that. The video sent you today how I plan to become a millionaire by the time I'm 40. I find writing video titles, especially for a finance channel, is incredibly hard because I want to bait people to clicking on to my videos. And I know my fear is that the vast majority of the audience have a fundamentally flawed perspective in that they want to get rich quick and they think investing is a good way to do that. And it's like, how do I go, I can make you rich. I believe I can. I don't personally see myself as rich yet. I can see where I'd come from over 8 years, and I can see where that's going because of compounding gains.
It's very, very simple. You're right. Like, I mean, investing and trading and all this and swing trading, it's all extremely over the top complicated. If you're busy and you're working, 50, 40 hours a week and you just want to be investing with £200, put it in, I go a bit more adventurous, maybe throw it into the NASDAQ, but just, something like that. About it every month too. It doesn't matter if it's up or down, just put your money in. I would throw a little tweak and say buy when the RSI is massively oversold, just as a rough should I buy now kind of thing, just to try to give you an extra couple % here or there. But generally speaking, compounding, time in the market, all that is the best.
Another thing that I sort of think is that until you've got around £100,000, there's not a lot. Spending 8 hours a day will get you in additional gains for a lot of people. Because basically, if you spend that same amount of time working behind a bar, if you have 10 grand, that's all you're working with. You spend that time working behind a bar, or you'll make more money in your portfolio, even if it's in Berkshire Hathaway. Like it's just the truth that working is when you've got a small portfolio, is the fastest way to make money. Only when your portfolio gets big, the best way to get it big is by investing in it lots, does it become worth going, okay, where am I putting this money? Because then a 10% gain is potentially a year's spending for you. So going from 20% to 30% is absolutely brilliant, and you should spend all the time in the world doing that. But when you've just got 10 to 100,000, keep on earning, and you want something that's running in the background so that while you're earning, the things that you want to buy aren't becoming more expensive than what your savings are. I think I had, like 40,000 in savings at the beginning of the pandemic, and the price of houses in my area almost went up by that much.
Yeah.
That was pointless then, forsaking that. Well, it wasn't, but...
Yeah. But here, like, I mean, I sold my car a year ago thinking it was worth what it was. The idea at the time was on the money. I was getting more for my car. My wife had just started maternity leave. I was like, right, can't time it, but I know this is all going to go up, but it's going to go back down. I'll sell now. Don't need to pay for my insurance, do all this. I'll get an extra couple of grand for the car, walk away, invest it in the stock market, put it in the stock market. And I think, can't remember what trade it was, but whatever it was within, like, if it was 10 grand that I put in from the car, I lost like 2 grand within like the first 2 weeks just from doing just the wrong side of trades. And that's the thing with the trades, you know, it's all probabilities.
Yeah.
So you could do 100 trades. The idea is you win 70% of the time, but you could lose 30, and you could lose the first 30 trades out of the 100 in a row. You know, that is a probability. It's law of averages. It's all of that. So if that was to happen, a lot of people quit. Hence why you see 80% of the traders, you know, lose their money, because that's what happens. And that is a real risk. That's why on the channel I always say you got to practice it. You got to take your time, hit per trade, don't go large. If you're sticking the same routes, always stick to the same routes. That way you take the emotion out of it. But
is there any way for a YouTuber to see your portfolio?
Do I let a YouTuber see my portfolio?
Is there a public place of your portfolio?
The only place I share some of my trades in the Discord. Win or lose, it just depends. If we're talking about like Tesla the last few days, I said, all right, buy it here, oh, this is how it's turning up, and do that. I encourage never for people to show what their balances are. I prefer to work on percentages. That way it doesn't belittle people that are maybe only playing with £50, and then it doesn't make people feel pressure to be playing with more money if someone's showing, you know, 10 grand or whatever. We only try to work on percentage basis. But my goals are very simple. It's was 𝗟𝗲 blockchain, still is, but it looks like they may be going through bankruptcy on the channel, so more picks like that. Premier African Minerals, Coral Minerals, and American Battery Metals. So they're my sort of, and Tesla obviously as well. So they're my 5, you know, long holes. I've got a couple of other bits like Cineworld, which we may talk about, just sort of sitting there, but they're not long holes. I'm invested in them, but they're not, you know, forever and ever. All them plays that I just talked about, you know, they're like 20, 30, 20, 40, you know, they're until ever they go bust or I'm rich on them. You know, that's the kind of the thought process with them. But just to go back to the car, so I'm trying to buy a car now. It's been 14 months. I need a second car. My wife's going back to work, and the same cars that are worth 2 grand than what I sold it. And when I bought it, it would have been 5 years ago, and I would only be taking a 2 grand hit if I still had that car compared to what I bought 5 years ago. So that's like just mind blowing that a car can.
And that's the used car market just going up in price so much.
It's through the roof. Absolutely true.
It's interesting because I'm a Volkswagen shareholder. Long. And I've been questioning.
I was in them for a while, sold out, but yeah, I was in them for a good while.
They're a confusing balance. Look at dividend is nice. I mean, I've realised that actually I don't like dividends as much as I used to think I liked dividends, because obviously actually I'm starting to understand that it's better than they reinvest that if they know how to. The dividend is only something I really want them to do if they have no debt and literally nowhere else to invest it. And I can see tons of places I'd want Volkswagen to invest that money. And tons of places that, and definitely they're the world's most in-debt company.
Yeah, I was in them for a while as well. I kind of looked at the electric vehicle side of things and went, okay, they're good cars. Can't deny they're good cars. You know, I was looking at this recession that was coming up, and I was kind of sort of sitting down. I was going, right, look at 2008, look at all the previous recessions, and you go, look at the dot-com bubble. Christ almighty, look at the dot-com bubble. You know, I use that for sort of what I explained the crypto is going to do. I kind of go, look at dot-com bubble, look at all the companies that were pretty much half of them that wiped out. That's going to be crypto. You're just going to see that serious goodbye crypto, and it's just going to have a mass, flush.
I think also car companies are going to become
tech companies.
You think about the money it's going to cost to change combustion engines to electric, because electric's coming, whether they like it or not, it's coming. So you have a brand new startup like, I don't know, obviously Tesla, Rivian or whatever. You know, you've got these new cars companies that are coming up that don't have that cost to absorb of transferring everything across. Then you've got all the labor people with all their contracts and their unions. Oh, I'm old in my job. I don't want to learn how to do an electric vehicle. Well, actually, we don't really need you to do too much because it's so many less parts. It's just a battery, effectively. Machine does the rest.
Yeah.
It's just going to be chaos. Laying off all those people, trying to get combustion in the middle of a recession. People are buying luxury goods. It's going to be a really tough time for the car industry. Well, combustion industries anyway, going up, definitely.
Yeah, I agree. And so I'm heavily considering, I mean, if Tesla go down by much more, so they would be...
They're going to go they're below $100. It's just inevitable. The charts are saying it. The market says it. I believe the S&P will fall by 70% before we're all set.
They're one of the least likely companies to go bankrupt. Only Elon Musk could potentially go bankrupt. They're the least in-debt car company out there. Great free cash flow to debt ratio.
See, everyone just thinks it's just cars as well.
It's the fact that they're recording all that driver data as well.
It's for the robo-taxi.
Well, I think
solar. Oh yeah, the self-driving. That's it. The robo, everything that they're doing, the tunnels underground. It's crazy. It's crazy.
If they do, the robots, oh god. But if they do manage to do driverless cars and they manage to retrofit that with a software update into all the Teslas that are around, Elon Musk said it in an interview, and I completely agree with him, that all of these cars, a driverless electric car is 5 times more valuable than a non-driverless car. And so all these cars that are suddenly on the road suddenly times by 5 in value. And what does that do to Tesla's share price when their cars that they're producing are 5 times more valuable, but the same cost to produce? What does that do to Volkswagen? And so the only protection Volkswagen has in my mind is they have quite cleverly got several brands that are all quite autonomous, and they own those brands. And if they develop something that can be used somewhere else, Apple are hiring from Lamborghini. Lamborghini is the only one that went up in value during the pandemic, and that's on trend. That's typical.
All that crypto money from buy their Lambos.
Crypto money, but rich people never
they're repossessed now.
Yeah, had to say it, they'll be taking them back. But yeah.
Well, that's a serious problem, you know. They literally will be getting all repossessed and handed back, and people will default on loans, and then that's what's just going to implode the whole thing.
There's so many factors at play. Price of used cars is an interesting one, because that to me indicates that people will pay for cars still, and that's only because there's been a lack of new cars produced. So it's hard to know what's actually happening to people's bank accounts. That's the funny thing.
I tell this to all my subscribers: spread your money, spread all your stock assets across as many brokers as possible. Do your due diligence, obviously, into your brokers. Spread it across as many banks as possible. Just spread your money everywhere, because I called the FTX. I wouldn't say I called that, but I did a video about, I don't know, 7-8 months ago saying Coinbase, Binance, just be careful. Like these brokers haven't been long and all that kind of thing, especially crypto ones. It's just so corrupt. You've just got to watch yourself. Get your money on the.
That's my thinking about having a small amount going into Hargreaves Lansdown's Vanguard. Not anyone can go bankrupt. Anyone can. But these are in the UK 100, and just enormous
FCA regulated.
Yeah. It's more the fact that they just haven't failed for so long.
I mean, if they go bankrupt, you can't do anything more, Harry. If you're going to invest in Hargreaves Lansdown to pay those fees for the privilege. I originally started my journey in Hargreaves Lansdown. Do I still have a bit of funds? I might still have a few funds floating about. I don't know. I have wee bits everywhere, but I've started moving in this year. I opened up my eyes with Invest Engine. Have you looked into them?
No, I haven't heard about them.
Have you heard of them?
So there's new ones every day.
They're only ETF based, unlimited enough, but they're the lowest fees, and I signed up to them. I've not put a huge amount of money in this size a year yet, mostly because I prefer to be cash. I think cash is king coming into a bit of a deflationary environment. I just keeping the cash pie quite heavy, and then I set up an Amazon business, and I'm sort of investing my money into things that are going to give me a quick return back. So I'm kind of doing that right now, just sort of keeping my cash pile, and everyone on my channel knows I'm sitting with about 50% cash. Deviate, swing trade in and out, but I'm trying to float around that 50% cash level. Yes, it's a waste of time having just cash, but like I said, I'm kind of always trading with it, keeping it close to grab it as and when needed. It's a scary time. Long-term investing will always be fine, but I would be treading carefully for the next 6 months. I wouldn't be. I always say 𝗍𝗶. I don't know if you watch Cornet or EastEnders at all, but there's a guy called 𝗍𝗶 who's always crying. I've got nothing left, and he cried and stuff. So I always share that meme.
Yeah.
And I always say, you don't want to end up like 𝗍𝗶. And the idea is there's just so much more downside to come, and buy every day. Don't do me, Kevin, and just keep buying and then just sell, freaking out one day. Don't do that. Just be reserved, bad support levels, and try to time it. Don't keep buying every little 1% drop.
Yeah, it's not talked about enough that obviously we all want to buy things with tremendous upside potential, but also what should be talked about at least 10% of the time is downside risk. And the whole reason that I would like to own a property has nothing, that there's no upside potential to it. I don't think property is something that's going to make me rich. The whole reason it's got a high price to earnings, because once you own a property outright with no mortgage, you have no downside risk, almost no downside risk. You could lose all your money. So long as you weren't in debt, you still have a house to live. And that's, to me, why they have a high price to earnings, because it can be that fallback to you, and it's just that it takes the downside risk out of your life.
I mean, you'll always have to pay your tax, your council tax, home insurance, and stuff like that. Those types of things, and just general maintenance, new roof every 20 years, or these types of expenses. But generally speaking, if you're doing a buy to let,
now that's talking about if you bought a property to live in outright with cash. So obviously, mortgages reintroduce downside risk.
Yeah. Really, I mean, we just remortgaged our house there, and Liz Truss cost me about an extra £200 a month because of her mini budget, and then she's walked away with 150 grand a year for the rest of her life. Which brings me on to even talking about _Ritchie Sunak. I was going to make that point earlier on. What's that guy worth? Like £700 million. Why is he interested in a couple $100 grand a year for the good of the country?
If I was to become a billionaire, I would still be interested in trying to do good for the country. That's something and to some degree, I think we want successful people running. I mean, the Conservatives have, the thing is, the Conservative and Labour, in policy, I don't see a hell of a lot of difference between them in terms of what they've actually done when in power.
I agree. I do. I would say 80% of politicians are out for their own gain.
And this is why I find it it's mind-blowing that it's not that I have
it's the same in Northern Ireland as well. We've a real shit show over here as well. So, we don't have it. It's just, I suppose, there was a scary moment probably a couple of months ago now when the interest rates, Liz Truss did whatever she did. It was the mini budget. And then the pensions pretty much got mortgage called, or margin called. The pensions were this close.
Wow.
UK society was about this close from just complete collapse. And it just sort of was pushed under the radar. But they were so close to just saying there's no pensions anymore. And that just shows you that the government doesn't really have the control that you think it is. It's the banks really that control that. But if they increase wages and go, okay, we'll give you 10% more, then that's sort of allowing inflation to be where it is, and you're not pulling it down. If you're just going to match it constantly, so you have to try and stop people spending money to bring down the supply. So then the demand is under control.
I'm telling you with that, that's confusing then their policies throughout the pandemic, where they sort of said that economics should not be a factor.
Your YouTube channel will be broke down, trust me, if we talk about all that nonsense. But we'll not talk about that. But
yeah, I don't want to be attacked. I'm not a denier of any science, just would like economists to actually be listened to a bit more. Right, I think that's all we have time for. I've got to have some dinner. So thank you so much for joining me for this episode, and I'll edit it and let you know when it's up.
Yeah, Harry, no problem at all. Good to have me on the channel. I'm sorry it took so long. I took so ill for so long. I still am. I have no taste. So yeah, I'm glad we've been able to do it. Good luck with your channel. How's your channel going, by the way? What are you at?
Well, I'm sort of it's going all right, but I'm sort of intentionally I was doing things like sharing it in loads of places and stuff like that, and that was getting me good views. And I was doing search trend optimizations, so that made me get a few videos that got to 1,000. But now I'm I want this to get easier as time goes on. I don't want to have to be doing more search trend optimization, all this work. I know that to succeed, I need good click-through rate and good retention. And so I've sort of given up on search trend optimization, but put that to the side. I've given up on trying to sort of push it. every video I'd done on Reddit, the right places, and I'm just like going, okay, that's when people stopped watching. At a minute, there's just a sharp drop at the beginning of almost all videos, and I need to figure that out until I get pop success. I know that.
Yeah, I wish I had the answers. My best tip I can give you is when you come up with an idea, right, I'm going to do this, do it for at least 10 videos. So, if you're going to try a new thing or whatever, try to do it for 10 videos, because I made the mistake where I tried something and it didn't work and then I gave up, and then I bought a few courses of how to promote your YouTube, because YouTube was a lot easier, Harry, 2 years ago. When I first started, if I had started at the start of the pandemic, I'd probably be sitting with 100,000 subs. It was that easy. It became very, very difficult. This last year, my channel has grew, and I don't know if you use vidIQ and all those types of TubeBuddy, the things that the 𝗟𝗏𝗍 tools, as I said, they're absolutely must. But you can check your competitors. So I've got my competitors to check. All their views are down. All their subscribers are down. And some of these guys are.
Well, I think what was also happening is, how when the market's collapsing, everyone is losing interest. I think all of our channels are on the market cycle, and that's one of the reasons I've got into YouTube. And so I've got 2 channels at the minute. I'm going to have 3 eventually, but I'm going away traveling in 2 months if I go for 5 months. So I'm not going to, when I come back, I'm going to have no job, and I'm just going to focus for at least a month on YouTube. But so I've got my Money Talks channel, which is me just trying different things. And I do wish I could stick with one thing more often, but every time I've gone, actually, no, I don't want to do that. And so moved on to something new, which I know I shouldn't do. But that's why I created this Cineworld channel. It just focuses on Cineworld.
You never even talked about Cineworld today.
I know. Well, I'm sick of talking about it. No,
that's all right.
I'm
only in it for the pump.
I'm more interested when I got the other phone. I'm more interested in anyway. Actually, I would like to talk to you about Cineworld one day. That would be great fun. But the third channel I'd like to do is one where I take finance in films, is what I want to call it, and break down what's happening in finance, the financials in films, what characters they're actually based on, who the real people are, what's happening in the scene, stuff like that. Because I feel like that is more, people will be interested in that more, despite the market cycles.
Evergreen videos, that's the key as well. Try to get it from else.
Financial channels are not going to be evergreen. When the market's going up, people are going to be like, yes, follow this subscriber. Oh my God, he knows what he's talking about.
He knows what he's talking about. Everything goes up.
And then when the market's going down, people and you go, well, I expected this to happen. People go, yeah, right. Toss it.
Yeah. And you have to remember, people that know how to trade and they're great financial minds, no disrespect, but they're not going on YouTube looking for that advice. They're spending probably 30, 40 grand on the piece of kit that tells you all the charts and all the great guidance. Don't get me wrong, I think for beginners, intermediates, YouTube is such a fantastic way of getting resource, and you can build up your due diligence. You can watch certain people and see, right, he said that, he's right there, he's wrong, is he full of shit and all that. Whereas you watch 𝗟𝗏𝗃, who's just full of shit. You could be led down a garden path,
That's what I find funny when I look on Reddit, and this is what scares me about the people that I'm trying to appeal to, is they post a 𝗟𝗏𝗃 video and they actually are like, oh, they're like, this is interesting. What do you think of this 𝗟𝗏𝗃 thing? And everyone else is going, obviously everyone piles in going, oh, he's a fucking idiot. But 𝗟𝗏𝗃 is not an idiot. He just cares about what he says when he's on air. He's purely focused on being entertaining.
Yeah. That's the misconception. That's the same with YouTube. You're completely right, Harry. You've hit the nail on the head. That is the issue. People think we are financial advice. We're not. We're people on YouTube creating content for hopefully entertainment purposes. 𝗟𝗏𝗃 is the exact same. He's eccentric. He's over the top. Buy and all this. He's putting on a show. If he was just sitting there going, well, actually, it could go up, it could go down. Who was want to really watch that? So you have to kind of be one way or the other. You have to also rub up people, a bit like Piers Morgan. The guy, people, listen, you hate him or you love him, and that's kind of what 𝗟𝗏𝗃 is. I personally like his eccentric. I mean, I think he talks a lot of shit sometimes about stock valuations, and now's the time to buy, and I'm going, fucking now's not the time to be bad. It's gonna go down, but you're right from a long-term perspective, his perspective, but he's just so kind of one way that you either like him or you think he's full of shit. There's no.
But if you just take him as pure entertainment, I think he's hilarious.
I agree. Couldn't agree more. Yeah. Mm-hmm. Yeah.
And I've seen him on interviews with other people when he's not switched on and on air, and he can be very intelligent and just nice to talk to and stuff like that. And he's not just going, "Oh, I sell." He's like, "Oh, I actually, yeah." He was interviewed by someone that was a big Tesla supporter. He's got a Tesla YouTube channel, and he was talking to him. It's like, "Yeah, so I did believe in Tesla, but then one weekend I was like, I met this guy, and he told me that basically, you know, like Elon Musk, if he wanted $2 billion, he'd raise it just like that." And that's when Tesla changed in his mind. And then he went to see 3 different people who had all bought Teslas, and they just loved their car. Yeah. And he was like, oh, this is where it became interesting. This is when he was like, started to be like, okay, Tesla isn't a joke. And like, that's interesting insight. That's not, none of that is saying buy or sell. That's just his world, his perspective, which is more valuable than someone saying this quarterly earnings had just gone up by 20%. It doesn't tell you a hell of a lot, actually.
No.
You think it would.
No, and you know, he's very much experienced. There's no doubt about it.
I'm going to go. So thank you very much, Damian.
No worries. All right, mate. Speak to you in a bit.